So this is a panel about payments, I have here Christoph and Alex, and they represent the new world, and I am the old one. My background is in financial technology architecture, but I come from the world of banking. So I work with all traditional institutions. I know the old world. And I think you will hear some very interesting stories and ways of thinking about payments from my panelists here. So I will ask them first to introduce themselves, and then we start the discussion. So, Alex?
Hi, everyone. I'm Alex. I'm the Chief Technology Officer of the Interledger Foundation. We're a nonprofit organization that is creating a protocol for payments. We based it very closely on the way the internet works, because if I want to send an email today, I have to wait. If you're on Google or Yahoo Mail or anything like that, just give me your email address and I can send an email. If we were going to try to do the same with payments today, it's going to be a bit more complicated. So we're trying to simplify it to the point you give me your payment address. We call that a payment pointer, and I can put money in it.
I'm Christian Grothoff. I'm CEO of Thaler Systems SA, and also co-maintainer of GNU Thaler, which is our payment system implementation of another open payment protocol. Our goal was to enable privacy-preserving small payments for customers. So when you visit a doctor, go to the pharmacy, buy an article from your favorite journalist online, take a train ticket, we believe that you should be able to do so anonymously. On the other hand, the person who is receiving money, usually if you do a business that's well socially recognized, you can be transparent to the government. You should be able to, forced to pay your taxes. And therefore, we can make sure it's legal when you do these transactions. And based on these principles, we designed the GNU Thaler payment system, and we're now operating it in Switzerland, and soon we'll have banks operating it in Germany and Hungary as well.
Okay. So, from what I hear when you describe the solutions you designed and implemented, you have in mind some barriers which exist in the current payment world and you want to overcome. And there are many barriers, but which aspect you wanted to address? Which problem you wanted to solve the most?
So I can show you that in real time if you want. We'll do a little thought experiment, okay? Actually, we'll do a little experiment with the audience.
Okay.
Right? There's three of us here. We are talking, entertaining, hopefully sharing knowledge. Who would be willing to tip us $1? I want a hand up of who would give us $1 or €1. We're in Lithuania. Who would give us €1 right now? Okay, I have two ladies in the front row. Please give us €1. See, that's the problem right there. Because it was €1, you instantly thought cash. And you were like, let me see if I have cash. I don't have a single dollar with me right now. I think in the world of digital payments, I've forgone cash. But because it was €1, you had options. You could actually look and think, do I have that euro? It's a small amount, I carry it with me, or I might carry it with me. If I ask for 10,000 euros, you'd instantly go, send me your bank details. Here's the thing, which bank details? Where do you bank? We'd have to have a whole negotiation about sending payment. If you think about this level of negotiation for anything else you do in your life daily, it doesn't really happen. I have an easy, simple way to give you a way to pay me. So for example, under the Interledger protocol, the first thing we solved was payment addresses. Because on the internet, computers don't actually stay in the same space. They move when a new network joins the internet. So if there's a building built right next door and they install internet, the address of this building in relation to the rest of the internet shifts, right? With bank accounts, you have to give me 3 points of information, 5 points of information. For example, I bank in the UK. If we were in Europe, I could probably give you an IBAN, and that would be easy because it's a standard across Europe and you could pay me. If I'm in the UK, I don't have an IBAN, I have an account code and a sort code. And then your banking app won't even let you put that down into the interface. The only thing it knows is IBAN. So we solved addressing first because it's complicated to even try to attempt payment before you can actually send the money.
Okay, so the problem of payment address and easiness of interaction. What about you, Christoph? What was the problem that burned through your mind when you said we need something else?
Well, as I said, we were focusing on the privacy when I make payments, especially small payments. And the main one that came to our minds were actually two. One is paying newspapers or journalists for their articles. So these days, if you want to read a newspaper article, you go, oh, buy a subscription for $500. Or, pick out your credit card and type in these gigantic columns and pay $5 for the article because of high credit card fees. And so we wanted this to be a one-click experience where I also wouldn't have to pay with my data on top of, the actual payment for the article, and thereby enable journalists also to become more independent of other sources of revenue like advertisement. Because that's, the free ones are advertisement-based, and the paid ones, well, who has a newspaper subscription for all the newspapers they're reading? Nobody. We read way more newspapers than we would ever subscribe to. It's not a question of money, it's just a question of that we like diverse information sources. And the second application that is particularly dear to me in this case would be donations, where sometimes you like to donate to an organization, but revealing information about yourself in that donation is a problem. Be it that you are supporting that cause, but you don't want everybody in the banking sector to be aware that you're supporting that cause, or the government to know that you're supporting that cause. And maybe you don't even want the organization you're donating to be aware that you're supporting that cause, because then they will harass you for more donations. And so donations is another big area, I think, where we need these kind of micropayments. But of course, the privacy applies way more broadly, as I said, in healthcare situations and so on. So that's our objective, to enable this on the internet and make it easy for people to make these kind of payments.
I understand. I'm challenging for the sake of explaining more the reasoning behind the system. So what I would say that this is also a problem of adoption, because in the UK, for example, you can make micropayments. Doesn't matter how small. If this is a problem of executing micropayments, it's true the privacy is not there, but. So I would see two problems. One, people who receive this money in this form through this payment channel would need to adopt your solution in order to be able to receive this money. And secondly, I'm not sure what are the AML regulations in terms of receiving money from sources which are not transparent. Is it a problem, or how do you see it?
Let's start with the regulatory side. As I said, we are operational in Switzerland, and so we did clear all of this with actually multiple institutions. We first wrote a paper with the Swiss National Bank on our solution, then we talked with the FINMA regulator, then we convinced this regulatory organization we're a member of, the VQF, and then we had to give all of the documentation to the bank that opens us the bank account, and every one of these had to check, of course, that everything was okay. And the key thing is, we do see who is receiving the money. We can make sure that they are running a legitimate business that's plausible that they receive these amounts. And we can also limit how much you're withdrawing. So initially you withdraw your money into our solution from your checking account. So it comes from a clean source and it's a limited amount. And then you can spend this anonymously from your digital wallet. So we have KYC both when we issue the digital cash as well as when you turn it in. We just can't link the two. So we know you were one of our customers, one of our legitimate customers coming from a Swiss bank account with a limited amount into the system, and we know who is receiving it. It's a Swiss business. We can check that that business plausibly makes this kind of revenue. We just don't know which customer bought it where, and that is compatible with legislation. We know the customers, we just don't know your customers' customers, and that's not required. In terms of adoption, you say micropayments are already possible. I think it already depends on the amount that you mean by micropayments. Some people mean by this, less than $10. Some people mean less than $1. We actually, think more like less than 1 cent is also fine.
Yeah, we have
so it's a big spectrum of what micro is, right?
Micropayment is, for us, 9 zeros after the decimal point. So we can go that low. Think about the idea of paying for a newspaper article, right? I want to give them $5 for an article. No journalist is that good, right? So I maybe want to spend 50p on an article. In the UK, the lowest payment you can make is actually £1. And because that's micropayment. In other parts of the world, you can go to 2. Usually, most of the accounting ledgers or the bank ledgers in the world work to 2 decimal points, so you can send a cent. But because, like, think about a country like the US, you could technically send a cent. But practically, because if everybody starts sending a cent, the underlying system can't handle the load, they've limited to $10. So the micropayment you can send is $10, not because of technology capabilities, but because it will break down the system if you try to spend 50 cents. That's why the cards companies don't allow you to charge less than $1, because it puts an enormous amount of load on the system and you lose 30 cents in the deal.
And there's another aspect I would stress, which is the usability. So if you have to authorize a card payment where you have to first type in a 16-digit code, then a 3-code CVC, and then you get an SMS and you have to type that in for your 2-factor authentication. Oh my God, I mean, that already in terms of how much it cost you to do in terms of your time is way more expensive than what the 5-cent payment is worth. So being able to authorize this with one click on your device where you don't need a second factor, where you don't need to log into your bank account or anything like this. This is what makes micropayments. Also has to be on the usability side. So it has to be technically scalable enough, and it has to be cheap enough also from the user experience. Now, in terms of your second question for the integration, of course that's one of the big challenges, get everybody to integrate it. But if you offer lower cost solutions, and for newspaper publishers they have no good solution today, that's a good reason. And this last part we are both very much on is making it finally a commons, a standard, an open protocol. So it's not like support yet another proprietary solution where you can only work with this one issuer. No, it's going to be an open standard like the internet. And so once you have this, there can be multiple competing payment service providers offering the same solution, and you will do the technical integration once, it will always work.
What about you, Alex, and your solution? What are the biggest barriers to adoption? What do you have encountered and what worked? What do you go? How do you go about promoting your solution?
So I can actually tell you what works, right? So we work with what we call account servicing entities. Those are people who hold balances and record transactions. Usually that's digital wallets, banks, all the way to central banks, right? So for them, there is an associated cost with sending money from one account to the next. If it's in the country or in the bank, usually that's a 1 and a 0 that changes in the database. The cost is virtually 0. They put some margin on it because they want to make money. If you're trying to do this between other countries or between banks, it becomes more complicated. Some countries in the world, only about 70 of them, have what they call instant payment systems, where every single banking entity in the country is linked to the same system and they can exchange money, with settlement being done at the central bank. But that's a third of the world. The rest of the world isn't linked together, even in country, let alone outside of the country. So they start creating this one-off connections, not based on any protocol because it's based on need. And that costs money. That costs them money, which they offload back to their customers plus margin. So the thing that works for us is showing them how they can go from all the way to 18% fees down to 1% fees. And that's the easiest sale we ever make. Because it's cost for them, it's money for them, it makes sense business-wise. Now, some people adopt it because of the financial inclusion aspect. Right now, some people would want to onboard more customers into the system. And so for example, a country about 10, I'm not going to name names because I'm technically not allowed to, but let's say a country of 10 million people somewhere in the world, right? They have about 7 million accounts in the country, and they'd like to bring everybody into the financial sector, but their solution does not allow for more accounts. More accounts on the system cost them money. So they've made this KYC process. Most people in this room probably went through some form of digital KYC. You scan your face, it shows you're a real human, you give it a picture of your ID, it shows your addressing information, right? They require you to physically go into a bank in order to sign a piece of paper, not because they have to legally, but because they're trying to increase the barrier to adoption or the barrier to financial inclusion because their system cannot handle the load. So for them, when they went from, I don't know, 15 transactions per second to hundreds of thousands up to 1 million transactions per second, it was an easy sale, right? So we sell based on need. What we built was a bunch of tech people sitting in a room who couldn't pay their Pakistani designer one morning because the US decided to impose sanctions on Pakistan. And that's how Interledger was created, based on a need in a research lab in a tech company, right? And then we built this thing, modeled it based on the internet. We thought there has to be a better way. Turns out some people see the better way and they adopt. Some people, they have intrinsic motivations to not adopt. Either they build their own system, like the UK built faster payments, right? It's one of the most complicated, horrible systems in the world. If anyone worked on faster payments, I'm sorry, but I'm not really sorry. I have to deal with it on a monthly basis. I don't know if you've noticed in the UK, you get paid on the last on the last day of the month. Technically, every contract says that. Practically, you never get your money on the last day, and that's because faster payments is so complicated and inefficient. People send it 5 days in advance, hoping it gets into your account in 5 days. So you have a 5-day window to get paid, right? So some countries like that, they're very proud of their system. They spent a lot of money. They can't justify just ripping it out. Some countries, well, let's look at Colombia, for example, right? Brazil, next door neighbor, they built Pix, one of the most innovative payment systems in the world. And they offered it to the world for free, right? You would think next door neighbors would adopt each other's system, make it interoperable, they already exchange payments, right? But politically, that was not a good solution. So not invented here syndrome struck in, and they decided to adopt a completely new payment system just for the sake of being new. Those are some of the biggest barriers when you adopt a new payment system. No matter how good it is and how much it makes sense for the individual, the people making the decision are not the individuals. And so it doesn't end up being adopted. I know. It's hard to hear that. It's hard to hear
correction from the old world of banking. The salaries are not paid through FPS, fast payment system, but through box, which is indeed a very old, very, very, very old type of system, and complicated, as you said. Can you elaborate more? Why do you think PIX is not adopted? So you mentioned it, you brought it up, and indeed is a technical solution with a massive adoption, which you know we've seen other solutions appearing and kind of nobody uses them. So what is the political angle here that others say, oh, sorry, I don't want to use this? For PIX, but also for your system or for your system. Why decision makers in the financial system or in political system actually decide to have a system which is cheap, transparent, fast, modern, can include everybody, is not something that we want?
So I am not a politician, so I'm going to speculate here. I'm probably not going to be politically correct. There are two poster childs for instant payment systems today. One of them is UPI in India, and the other one is Pix in Brazil. Everybody talks about them. They're success stories. Both of them have similar problems with adoption. India's UPI is built on their own proprietary standard. And so even when they actively try to help other people to integrate, like they're trying to help Mass from Singapore integrate, it's been 3 years and live payments still don't flow. You have commercial payments, but not peer payments or retail payments. And that's because the system is incredibly complex. Pix, on the other hand, while it's a poster child and technically it's open source, only the pipes are open source. The business logic behind Pix isn't open sourced. So even if you try to adopt Pix today, you'd still have to build your logic engine, which is different from Brazil. Brazil built its logic engine based on their current situation. Even if a country like Colombia didn't have political considerations, it wouldn't be a cheap adoption process. It would be highly complicated. But because national pride, I don't know, I'm Romanian, right? We have a thing with Hungary. traditionally, even though I am technically, ethnically Hungarian, right? My last name is Lakatos. It means locksmith in Hungarian. I don't even know how to pronounce my own name, but I got bullied in school for being Hungarian, right? So if Hungary came with the most innovative idea on the market in the world, flying cars, I don't know, Romania would be like, no, this is made in Hungary. We don't touch that shit. And so even if it's not political, it's national pride and a bunch of other things that kind of influence decision making. Think about going to the supermarket and buying your favorite brand of, I don't know, bread. I don't know, I was a fan of Warburton's in the UK. That was my thing. I never even looked at other brands, right? It's the same for payment system. The same type of people and the same type of decision making happens in these things. Some people in the world will have a research team and you'll spend 18 months trying to figure out what you're buying. Some people will just go, no.
Christian, what do you think?
Well, I see two reasons. One is, as Augustus Carstens from the Bank of International Settlements put it very nicely, he said, the key difference between cash, physical cash, and central bank digital currency is that the central bank will have absolute control. And so that's what he gave in an interview, in a press conference. So if you want the absolute control, well, then you wouldn't want a solution where you don't have the absolute control like with GNU Taler. So the privacy aspect prevents you from basically blocking people to spend money because you don't even know who's currently spending the money. So we would lose that aspect of absolute control that some central bankers might really enjoy. That's, again, a political thing. And the other thing I, again, see is these nationalists. We can build the best solution. We have the best team in every country. Now, our argument is, of course, it's a free software project we have. We have people coming from all over the world. We have people from New Zealand, from Argentina, from Europe, from Russia, working on the project. So it is already not really a national solution, which is good and bad because then you don't have a national champion who goes and says, this is our country's solution. On the other hand, it is free and open source software, so it's also not controlled by another country, which means adopting it doesn't risk you to these things that you mentioned with PIX and UPI, where you go and say, well, I don't control the technology, I don't have the source code, I don't have the right to modifications, or key pieces are missing. No, in our case, truly everything is free software, because we think free software is about human rights. You know, free software has these 4 principles, which I'm not sure you're all familiar with, so I'm going to repeat them here. The first right is you have the right to run the software. Second right is you have the right to read the source code, which is the original preferred form of making modifications to it. Third right is you have the right to make modifications to the source code. And fourth right, to share those modifications with others. If you have those 4 rights, then I would say you have control over your computing. Now, you may go and say, but I'm not a programmer, I can't do these modifications. Yes, but you can hire one. And in the case of proprietary software where you don't have those rights, you can go and say, well, I would like to make these modifications, but I'm now dependent on Microsoft or IBM or Google to make these changes. And that's not a dependency you should allow yourself as a sovereign nation or as a sovereign citizen. And so we believe it's important that everything is free software, and not, as in the PIX case, we would call it open core, where you have something that is open and then there's key things that are proprietary that are missing. And we believe that that should be a convincing policy argument. But of course, proprietary solutions are still very popular, in part because I believe it's also corruption. So, for example, the European Central Bank for the digital euro is spending $1.3 billion. Among this, 50 million for projects that a colleague of mine had a team of students implement in their 3rd-year project course. They had to learn project management. We gave them the 54 million euro digital lookup service component. We figured that was a fair project assignment. It's online and working if you want to see it. So corruption plays a good role in proprietary software because you can, of course, as a government official, give the task of development to your favorite local company, and then later get a board seat or some other kickbacks.
Look, it's not all doom and gloom. Before you start despairing, payments are not all doom and gloom, right? We are aware of the world and how it works, and we're trying to work around that. We don't live in an ideal world. Trying to build ideal systems is always going to fail, right? So what we usually do is we have a country that's politically charged and that has we invented the system, it works, we're not going to change it. We connect at the edge and connect the whole country in it, because the internet, right, has networks of computers all internetworked together. So one network talks to the other, and so on. For example, if this would be live streamed to get to California from here, you jump through 7 computer networks, right? So not everybody has to use the same protocol everywhere, but something on that network, on that other network, should talk a protocol so that the networks can exchange information. So for example, when we go and do whole country adoptions, right? We don't build Interledger in every single bank. A small country of, well, let's say 10 million people, right, has 27 banks in it. That's a lot of integration. What we usually do is we integrate with one of the banks that's already on the national instant payment system, and they are kind of like a gateway or a router into their way of their internet for payments, right? So they basically proxy all transactions to the country and from the country. Now, that's an actually easier adoption process than going and talking to the central bank, because the central bank, again, politically charged. The commercial bank that acts as the gateway, they have a commercial interest to route all traffic through them because it makes them money, right? The more transactions they can process, the more money they can make. Now, that breeds competition. So we usually have the first, we usually get the innovator in a country to adopt Interledger, and then the biggest bank in the country is going to follow suit within the first 6 months because they're missing out on a piece of profit, and they're going to come and adopt. And then you have multiple connections to the same place. So if you work around the way the world works and the way payment works, if you think about payment companies, they do this. So there's TerraPay is probably one of the most popular payment companies in the world. All they do is build connections into local banks and local infrastructure, right? The only difference between them and us is what we do is all open and anyone can adopt the same protocol. They have their own proprietary software. It's based on a business model. We as a non-profit, and we incorporate as a non-profit on purpose. We are not legally allowed to make money, to make a profit, right? We're doing this because we believe in the mission. For us, the mission is financial inclusion. Getting a bank account or access to a bank account might be the first level of financial inclusion. But if I tell you one of the most unincluded countries in the world, would you think it's the US? And that's because getting access to an account and getting access to credit is not the same thing. So getting access to an account and getting access to financial products is a whole new level. So we're trying to make it so more people can participate in the financial world, not just get an account and pay another human, right? That might solve part of the problem. We're being told we're over, so I'm going to cut it short here. And if you want to hear more, we're around the conference all day and tomorrow. Come find us.
Thank you very much. Find these people around because they have very interesting stories. Thank you.
Thank you.